Hello guys, what is up? Welcome back to the SA Global Investor channel. We've been quiet for a while actually, a lot of personal issues going on, but decided to pick this channel up again, with renewed focus, with renewed energy, and with the belief that we can actually, sort of like consistently make money from the markets. Earlier this year, I actually, before like everyone noticed this uptrend in gold, I actually came up with about 2 or 3 algorithms on how to code. I mean, not on how to code, but 3 algorithms to basically trade the market. I've tested this live over the months of September and October. September, actually from August, September, October. August, September, we've been wildly successful. October, you see this down move here, this down move here, this caught me, right? So obviously it's a setback, but every setback for me is an opportunity to learn and an opportunity to grow. I don't believe you can predict the markets. It's too much randomness, but what I can do is I can react. And in future videos, I'm just gonna take you guys through how to accelerate the creation of forex EAs and indicators using AI and using the MetaTrader 4 terminal. So yeah, without any further ado, the topic for this video today is looking at the Fed. Obviously for the weekly laydown of the markets and all of that. I think the outstanding thing for me is number one, the Fed interest rate decision. Number two, I want to talk about the government shutdown because it actually took effect 2 days ago or a day ago, but I know it's in November where people won't be having food stamps. What the effect it has on, well, what I anticipate the effect is going to have on corporates and subsequently the markets. We're also going to have a look at world tension, just a global look at what's happening in the world right now. And my pivot towards gold, this has been I intended for this channel to be fully crypto, but I feel like in life you have to be dynamic and you have to adapt. Not to say that I'm turning against crypto, but guys, if there's an opportunity to make money in the forex market or stocks, I'm gonna take it, right? It's not to say that I'm a Bitcoin believer, but if there's opportunities to make money in the short term, why not? And number 5, should you actually invest in gold? Remember guys, this is not financial advice. This is just my opinions. If you want to make informed decisions about your finances, please do additional research. Without any further ado, I'm going to begin, and I'll just start with the Fed rates decision. This was actually announced last week. The Fed cut rates again, but Powell raises doubts about easing at the next meeting. There's a sweet and sour moment in this, right? Because obviously we cut rates, so we know the effect that it has on the economy. Obviously inflation has came down to the levels that they want it to be in, but obviously policy changes and all of it, and how the global setting or the global policy or the global sort of like where we are globally, how that's looking is sort of like cautioning the Fed on their next decision. So there's a unanimous decision to bring down rates. So we're actually wondering now, is this a soft landing or are you guys just trying to stimulate a dying economy? Because it does look like the US economy is dying. Well, I say dying quite broadly, but I just mean like in terms of like the job numbers, all of that. So it makes sense to cut rates to stimulate the growth. As you guys know, quantitative tightening, just the process of reducing the amount of money in the market or in circulation. They're doing the opposite now. They're injecting money. The hopes here is that we have increased jobs, economic stimulation, and growth. When doing that, you have to take into account the effect of inflation. Inflation is everyone's enemy. Inflation is the one thing that makes us look for alternative ways to make money so that we can leverage our time. They're gonna cut back on quantitative tightening, moving more to a positive stance on the economy, but caution. They actually practicing caution. The effect that statement had on the market, cautioning, right? It sort of like made traders a bit more skeptical. They reduced the odds of betting long against or betting long on risk on assets, for the simple fact that if we decide to tighten for the next cycle, that could be I don't want to say catastrophic for the market, but it will have a negative impact, because obviously the dollar would gain strength, and well, generally speaking, the dollar will gain strength, and we will also see a fall in Bitcoin, unfortunately, and cryptos and all of the other risk on assets. The statement obviously reiterated concerns that policymakers have, and obviously they're taking into account the risks that this has on unemployment. So yeah, quite a sweet and sour, bittersweet moment for the Fed and for the general market. We saw the markets didn't react violently to this, because sweet and sour, in between hot and cold. So just go over to the next thing then, which is government shutdown. So the government shutdown, as how I understand it, high level, is just Trump sort of like taking the stance that, look, we're spending this much on the government is actually taking this much of money, raising the national debt, so we want to cut back on this. And what ended up happening was, there's been a freeze on food stamps. This comes at a critical time in American consumerism. November, December, November is Thanksgiving, December is Christmas. There's actually been an uproar in the general public about whether this is viable, whether this is actually taking into account your average citizen. I'm in the middle on this, guys. For me, if you're an able-bodied person, I feel like the right thing to do is to be on food stamps. And let's say you lost your job, I agree, be on food stamps for the time being, but there should be a time limit, right, guys? Because what are you saying to the average taxpayer who's paying their taxes, working hard? You're basically telling them, no, you can support me, your output will sort of like fund me while I sit at home. It just creates an unstable market. At the same time, I am understanding, because there are, generally speaking, old people, disabled people, and mothers who can't really afford to maintain all their kids. So I do support that. I just think it was really aggressive what they done, and we'll see how it plays out. Tying this back up into how I think it affects the market. Look, it's quite direct for me. Reduced spending results in reduced stamps results in reduced spending, which results in lower corporate profits. Obviously, this filters back into the S&P 500, the Nasdaq 100, where we essentially see that stocks could fall. This then ties in directly with the Fed's delayed sort of like decision. What I'm trying to generate here is a picture of confluence, right? So the Fed decided to keep lower interest rates, but caution. And then we've got the government shutdown, which poses a risk to corporate profits. So seeing your Nasdaq or your S&P 500 possibly decreasing in price. So that's already confluence factor number 2, right? Global tension. Right, so obviously at a critical level, right? And this is from the website worldtensionwatch.com, comprehensive website where you can see all of the events that happened over I don't want to say the course of history, but over a sustained period of time. So currently, what we're looking at over the last sort of like 3 to 4 days. The big military ones is Trump ordering the Pentagon to resume US nuclear testing. I read something that Russia is on the same boat, so again, global tensions are flaring. Israel and Gaza fight, it's still ongoing there. Russia, Ukraine, so there's an ongoing global tension, right? So this is another confluence factor for the flow towards safe havens, right? So dollar losing value, corporate profits falling, world tension, right? Tying all of it back to the price of gold, what we see here is what we see here is that gold has made aggressive moves up. Gold has aggressively moved up, psychological, so I think this is psychological support, right? Because we tested the zone twice and then we broke this neckline. To me, this is profit taking. This is purely profit taking. We've reached the psychological level, profit taking, right? And then the market continued down. This was in anticipation of that more profit taking. I mean, this down move here psychologically triggered this down move here. Where we currently with the market now, it looks like common downtrend pattern. We come down, break a neckline, sort of like test it, come back down, break the lower lows, and then test those lower lows again. My stance on the market is that the rate cut has been priced in. I think it's been priced in. I think right now we're looking at opportunities for retail traders to go long, because if we do break this level of support here, I do anticipate us testing this neckline here, which gives a good amount of profit between this zone and this zone here. When we get to this zone here, guys, I will be very cautious on taking more buys, because as we reach closer to the psychological level, there is a higher probability that we do go down. My stance for the market this week is that we actually break this zone here, test these zones here. So by Friday, I expect us to test these zones here, and then we'll see what the market does from there. I'm taking an interest in gold because of all of the confluence factors that we're seeing right now in the market, right? Fed rates coming down, dollar loses value, government shutdown, obviously that correlation with the anticipated stock prices, and then world tension, which is just on a rampant increase. My opinion on whether gold is a good investment: gold has seen sustained growth over the years. It is one of the oldest forms of money, so I do believe that having gold in your portfolio is worthwhile. Should you buy at these highs? Probably not. I mean, if you're an investor, then any time is a good time to buy. As a trader, I mean, I'll hold off until we break at least these zones here and then look to take any further buys. But yeah, I think Bitcoin, saying Bitcoin, that just shows you what sort of like crypto fan I am. But should you invest in gold? I think gold should be a part of your portfolio. Gold in conjunction with Bitcoin, those are your safe haven assets. Probably allocate 10 to 20, 30% of that into your safe haven assets. Because remember, if you're someone like me or majority of the market, you're looking to make money, and to make money you need to take risk. I cannot have 80% of my portfolio in a safe haven, so I would say 30% is reasonable to put into Bitcoin and gold for the next 20 to 30 years, and then we'll see where we go from there. So in essence, guys, I've covered all of my points. I've tied that back into the price of gold by looking at confluence factors, tying that back up with price action, and then also just giving a bit of advice on whether to invest in gold. If you like the video, please like, comment, let me know your thoughts. I'm looking to grow this channel to 1,000 subscribers by the end of the year. It seems a bit ambitious, but I think I can do it. And yeah, thank you to my current viewers, and look to see you in the next video. Thank you.